Hey Jeff, how's it going? Hey Jeff, how's it going? Can you hear us?
I hear you. Yeah, I think I might have been on mute. What's up?
Yeah, there we go. How are you? Welcome back.
I'm good. I'm good. Just trying to catch up. It's a lot.
Yeah. How was your trip?
Amazing. Yeah, it was tremendous. It was out of this world, once in a lifetime. Totally worth it.
I mean, we
Highly.
obviously missed you. There's been so much news in the last couple of weeks. I mean, it's nice that you got a rest though through some of that. Much of it noise, I'm sure.
Market's in the same place. If you look,
Right.
it seems extreme, but yeah, we're within like 1% of when I left on the S&P. It's just
Right.
it's gone down and then it's come back and it's but it's you know same place.
Right. And we'll be getting started soon here. I'm sure Roger and Lance are about to jump on, and we have a ton of topics to cover today too, and especially with the start of the month. I'm excited to hear what you're seeing, Jeff. I mean, you, I, it's not an exaggeration to say, outside of burn notice, a good 80% of your trades happen in that first week of the month, huh?
Yeah, there's a lot. There's a lot of like book rebalancing that institutions do. Um, at the beginning of the month, at the beginning of new quarters. This is a new quarter too, so it's huge. What's up, Lance? Long
The
time no
champ,
see.
the champ is here.
The champ.
I mean, Jeff, while you were gone, I've been on the hottest run
Nice.
possible. I can't trade any better. Bring on the junk stocks. Give me every 200 multiple $0 in revenue,
Bring
52
on the
week low
junk
stock
stock.
out there.
If you've been trading some of the Lance junk stocks, give us a shout out in the chat. I want to hear from you guys.
Robolics, Pinterest, Snapchat, American Airlines, Rivian. What other crazy multiple stock out there? DraftKings. I mean, just the worst names in the world. Give me the
Everything's
52
junk
week
right now, though.
lows.
Everything
And
is
there we
junk right
go.
now.
Now we have Roger Scott on. Welcome and thank you. Thanks everyone for joining us. Thank you, Roger. Thank you, Lance. Thank you, Jeff. I want to get started here as soon as possible because we have so much to cover. And Roger, are you there?
I'm right here.
Awesome. So I wanted to start off with you because of what's going on, just kind of big picture in the market, and we have FOMC today. So this morning I watched your video that you send out every morning, and you were talking about potentially the market bottoming out here. What are you seeing in terms of the sectors, and what are you seeing with the bonds, and what is it maybe signaling about what the Fed's about to do?
Well, let me just share my screen, and I'll give you a nice little. My screen share is disabled.
That would be Josiah again. Let me get
That Josiah. See, folks, just when you thought it was safe, Josiah doesn't. Hey, Josiah, make me a co-host, would you?
you should be good now, Roger.
Yep, I am. All right. So, what you're looking at is the bond market, and I was talking about this with Jeff just yesterday, actually. If you look right here, you'll see that the curvature of the slope, it looks like it's going about. I mean, I'm not a geometry expert, but I would say that's about a 40-degree, 35-degree slope. And as you can see here, it's been kind of getting really, really choppy. And the more this slopes sideways, the less pressure this puts on consumer stocks and tech stocks. For example, and I mean, I picked two real simple examples. See Amazon right there? See Crocs? They're doing exactly the same thing. It's not because these stocks love the bond market or are correlated to the bond market. It's because the bond market puts the most pressure on these type of stocks like Amazon, Crocs, consumer and discretionary stocks. So these stocks will tend to follow the market. Well, my theory is if the bond market is turning sideways, number one, that means the long bond is anticipating a slowdown of the Fed's rate of increasing rates, or it's already pricing in that they're going too heavy at this time. Basically, the speed of increases. We know rates are going to go up. It's just a matter of time. So we know that this will ultimately fall down and continue going lower. But if we can the longer we can go sideways, the more time this buys us for the market to gain its strength, earnings, positive news, lack of COVID, and all that other stuff to help propel the tech stocks. But my point in saying this is if you look at the bonds, you'll see that it's congesting. So if you look at some sectors, and let me just kind of go into that. It's kind of interesting because today's Tuesday and Wednesday, and I like to talk about my sectors on Wednesdays, as you know, Francisco. So if you look at the sectors, the major sectors, you will see, look at the financial, down, sideways. Look at consumer discretionary, sideways. Look at communication services, sideways. Look at technology, sideways. Looks like it's building a base. So my theory is, as long as the bonds stay choppy and don't put too much pressure on the market, we're going to start seeing more of a choppiness, choppy trading action in the speculative sectors as opposed to more downside. Also, with that said, and something that Lance brought up actually yesterday, the Cathie Wood stocks started to rally, the small caps starting to rally. The Russell is starting to outperform the other stocks. And lastly, the biggest surprise of all is, as you guys will see here, the energy sector went from being the strongest cumulatively for the last 6 months to being the weakest one on a monthly basis. So you're seeing a lot of sector rotation. You're starting to see these stocks, these technology, consumer discretionary, communication services, starting to move higher at the expense of energy. Now, with that said, I'm still pretty bullish on healthcare and consumer staples, and I'm going to remain that way. But as far as energy, it's a wait and see right now, because if we do have a recession, it's going to bite into the energy sector. If we don't have a recession, then I would consider this a pullback. But even today, on a cumulative basis, energy for the first time in 6 months is not leading anymore. Consumer staples and healthcare is. So even on a cumulative basis, and it's actually the first day, I think, today. Let's see. Let's go back 1 month. Energy. Yeah. Today's the first day since January. Here. Let's see. Since January, I think. Here, February. Let's go back 110 days or 120 days. I think it's the first day in 120 days that energy is not leading on a cumulative basis. So basically, that's pretty significant. So today it was still leading on a cumulative, but today it's not leading on a cumulative. It's falling down. So on a monthly and on a cumulative basis, these two are still holding up, but energy's not. And again, I'm becoming a little more optimistic about the speculative stocks because of the bond market. Sorry, I didn't mean to go over my time period, but that's what I wanted to tell you guys today.
No, that's perfect, Roger, especially when with FOMC in a couple hours here. And you mentioned two things that I wanted to actually ask Lance about. Lance, you've been telling us, you've been pretty bearish on energy, and you're right there. You've also been telling us you really like what you like to call Cathie Wood junk stocks, which are high beta, high short interest. Maybe they don't have too much in earnings, but boy, do they move. Can you tell us a little bit about that? Like an update on what you think on about those stocks, tech, and how you're trading them?
Yeah, so to toot my own horn, toot, I have been shouting on top of mountains for 2 weeks now. Energy is the worst sector to be in. And look at all these sell signals we've been having in energy. Avoid energy. It is horrendous, horrible. I've been the energy bear out there. And what have I been buying? We actually just did a trade with Project X members, which very limited group. I think it's only about 60, 70 people. Is the Cathie Wood stocks that you mentioned, Fran, the growth stocks, the high multiple stocks, the stocks that will probably be bankrupt in a few years, maybe. Basically, the most speculative, worst chart, high short interest, names that have gotten crushed. Like, for example, Roblox was one. It was a $140 stock at one point. Now it went all the way down to mid-20s or so. Well, this is a prime example of a name. Bought call options and actually bought August, which I never do. Usually buy short term. Stock was up like 15% yesterday. Boom, you can make 20, 30% on that trade. Move on to the sidelines. Roger mentioned Crocs. We had Crocs calls. Sold them yesterday. Stock was up about 11%. Rivian had calls and sold too early. Another name, huge mover, up 10% today. Just some of these stocks is when they go, they don't move like your boring ETF or your boring stock that moves like 0.5% or 1%. When these stocks move, they get momentum. The shorts have to cover. They have a massive short squeeze, and it's just a slow, well, actually not a slow, an aggressive uptrend when you have these moves. And we've been seeing that over the past couple of weeks. I've been trying to, as much as I can, get out there and ride these bad boys. They are fun when you could get in. Yesterday, I had a monster trade in Amazon that I sold too early. I still made about 30-40% on the option, but they went up over 100+%. I mean, Amazon was a prime example. Yesterday, you had the market dip down. Amazon started leading the way, and just a slow, steady uptrend. I took profit targets again way too early. The stock rallied another like $2-3. But this is another stock that has just been crushed out there. Very bad charts. But when they move up so much. So, all this trend following, like you had a lot of people say, oh, rotate into copper, rotate into fertilizers. All these are flight to safeties. You've gotten smoked trading those names. The action is in the high growth stocks. And it's just been a hell of a ride. Like it's been unbelievable the past few weeks.
I was spying in your trade chat we have here at Wealth Press, and I saw you're still trading these names, right? You're still.
Oh yeah.
Yeah, I saw one go through maybe an hour ago in Blitz.
Yeah, we did. We took profits in Zillow this morning. Bought calls late yesterday afternoon. Stock was up over 3% today. I mean, Rocket got upgraded. Stock was up like 9%. I mean, this was one day overnight action. Did Amazon yesterday too, and then today bought some Snapchat calls. Yeah, you got Amazon Prime Day coming up, and then today bought Snapchat calls that capture earnings for the July 22nd expiration.
Awesome, thank you, Lance. Jeff, that's something you've actually talked a lot about. When one of the stocks you're in makes a massive move up or down, if you're long up, you always tell me like, I'm surprised about the move, but you're always like, no, friend, like that's what you need to expect. When the stock is beaten down that much, expect a move like that to the upside.
Yeah.
Can
So
you kind of expand on that? Like what
the
do
markets
you know about that?
The markets are all about proportion, and the smartest guys in the market are like these mathematicians that statistically quantify exactly what a normal move, an abnormal move, a 3 standard deviation move would be in particular financial instruments. So in high beta stocks, if you've been down 35-40% in a month, you don't short it when it starts up 1.5%, because you can expect a proportionate move. You can expect the rally back to be at least half of that, 15-20%. So understanding how these animals move, how these stocks move, what to expect will save you money in timing in, which is always the most important part of any trade. It's a lot easier to make money when you time in well than when you have really lousy timing. Because if you have really lousy timing, you're going to be sitting there, you're taking a lot of pain, you're going to be worried about stops, you're going to be frustrated. You get back to a little bit above even, you take profits too early. So if you time in well, if you time in really nicely, and like knowing the size of an anticipated range bar is super crucial to that, then you'll do really well. But yeah, so that's the aspect of that.
And like we were talking about earlier before we actually got started, you just issued 9 trades, is that right?
Today, this morning.
Yes. So it's the start of the month. This is kind of where you make most of your moves here.
Third trading day.
How do our viewers get in on those trades?
Did you say you issued 9 trades?
Yeah. Well, 9
wow.
stocks and it's a month.
Yeah, tell me one. Tell me one.
I believe in the Santa Claus dumping his bag effect. So this is a system that I have that takes advantage of rhythmic anticipated movements over the course of a month in the stock market. And let me show you why. Let me share my screen here. But I think you wanted me to talk a little bit about the markets first before I dive into that, before I dive into my presentation. Just to summarize what you guys were talking about earlier for just a moment, if I will. What I'm seeing, and you're going to see it once you join Monthly Flow Elites, what you're going to see is the market right now is playing two major stories. It's playing, obviously, the story that's been captivating the market all of 2022, which is inflation. And then we're switching now, and you're seeing this rotation out of inflation into recession. So one day it's inflation, and the next day it's recession. Those are the two major dominant themes. When inflation is the dominant theme, you're seeing commodity stocks rally, you're seeing tech stocks collapse. When a recession becomes the dominant theme and we're seeing slow economic numbers, you're seeing the inverse of that. So to start July, to start Q3, we're seeing the recession story be the dominant theme so far in the markets. And the big winners are, like Lance titled them, some of them are junk, some of them are not junk. They are stocks that have been beaten down because of inflation. So let me share my screen, and that just gives me a good introduction to show you guys what I want to talk about here today, which is money flow.
Let's hear it. I want part of the 9. I'm fiending.
I'll get you there, Lance. Just bear with me, all right, dude? So today, I want to rush you my brand new monthly trades. And this is like Christmas morning. They just came out. And because the market's kind of like loosey-goosey here, it's a little bit wishy-washy. It's a really good day, in my opinion, also to time into these trades. So this strategy is based on a predictable, repeatable monthly phenomenon. It happens the first 2 trading days of every month. Institutions rebalance their books. Most people wouldn't know this unless they worked on Wall Street. But every single month, a massive flood of capital pours into very specific funds. And it's even more pronounced at the beginning of a new quarter, like today or like this month. So roughly $25 billion on average is being forced into the market. The sudden surge of new cash forces large Wall Street institutions and funds to buy stocks. I found that Wall Street loves to dip their little toes in the water on certain stocks at the beginning of the month. And Lance, you were talking about it earlier, like these outsized moves in these stocks, 10%, 15% in Roblox. That's institutions starting to get repositioned in them. That's not like little Johnny in mama's basement waiting for the meatloaf, putting on a position. Those are the big boys, okay? So, and if they like what they see, they ride them higher and higher all month long. You just need a way to get in ahead of these institutions, right? So look at January, when the markets were just puking, right? Check this out. The S&P fell 7.4% for the month. But on the first trading day of the month, I spotted a $1.9 billion money flow surge into Citigroup. That's a massive flow in one stock. First trading day of the month, $1.9 billion money flow into Citi. Most investors were steering clear because they're like the sheep that just read the news and they believe everything they read. So there were negative headlines. Citigroup failed to disclose reps, tax, liens, and judgments, FINRA said, right? Citigroup was being fined by FINRA, and the stock price took a major hit. The bad news kept rolling in. Citigroup's stock slides after capital rule triggers pause in stock buybacks. 7 days later, they issued a negative press release and the stock price cratered even more. But the $1.9 billion money flow, this was clear to me. It was clear as day. So what I did is what I always do. I sent out a high conviction trade alert on Citi. I give the symbol. I give a limit to buy it up to in the stock. I give you an option idea on the same stock idea. I give you a strike price, the limit price to pay for, and what I think it's going to go to, the target, and a little bit of write-up, a little bit of analysis. So that took the action. So those that took action on this trade alert made 7 times the average yearly S&P return in under a month. 79% opportunity in Citi. So this dude, Michael, wrote, doing great, Jeff, up 60% on Citigroup last month. Hell yeah, Michael. But the brutal market sell-off didn't end there. That was not it. The market kept tanking in February too. That was down another 4.3%. I'm sure you remember that. Most traders were ready to throw in the towel at this point. They were like, forget it. But all I was focused on was where the next money flow was going to hit. So like clockwork, on the second of the month, there was a $220 million flow in Allegheny Technology. Now, it's a smaller cap stock than Citi, but that's still a massive move for Allegheny. So my system picked up on it. On the second day of the month, there was this huge flow right at the beginning of the month, like clockwork. So I sent out a trade alert to all the Money Flow Elite members. It's right there. This is not like Fantasy Island. I'm not going back like 75 years. This happened this year. This was an actual recommendation. And this was the write-up. This was the stock recommendation. These were the calls I recommended. with the strike, with the limit.
Oh, ATI. Yeah.
Sure enough, ATI exploded for the rest of the month, 96% in the same month in ATI. Recent history, this last February. You see, the first two trading days of the month, that's when Wall Street, they tip their hand, those of you that play poker, that's an expression that I love, on the stocks that they plan to accumulate. They start the accumulation process on the first two trading days. And that's when the fireworks begin. So think about it. Every 2 weeks, you and I are doing something to send certain stocks soaring. Every 2 weeks. It's got nothing to do with our trading ability, nothing to do with our shopping habits, nothing to do with the bills we pay. Most people don't realize it, but 41% of working Americans have their paycheck set to automatically invest in their 401k. Ta-da! Every month, this money is automatically getting deposited into Wall Street hands, and it's going straight into the hands of the big institutions, right? So what do they do with it? They invest the money in the markets like they have to, but they can't just throw it into the S&P. You see, money managers get paid hefty performance bonuses for beating the S&P. So they have to single out a few stocks each month that they can ride higher and higher. So what do these institutions do? During the first 2 days of the month, that's the test time. That's where they're pumping in larger capitals into a stock. They have a list of stocks they like. And if they like how the stock price reacts to their massive buys, they can confidently keep on buying, supporting their initial position and sending the stock price higher and higher the rest of the month. They can't get all they want on those first couple of days of the month. They have to do it over the course of a longer time, that accumulation period. So here it's happening in real time with VRTX, Vertex. This was a trade alert I sent out to Money Flow Elite members. Funds probably, check this one out.
Mm-hmm.
And look at the stock volume. Look at the spike here in Vertex on December 1 with the big gap up, right? Almost 4 times the daily average volume on the first day of the month. They do this to gauge how sensitive a stock is to large purchases. If everything checks out, they're going to spend the rest of the month accumulating. And you can see it just consolidated and started to ramp higher. Accumulation results in the stock price going higher for the rest of the month. And boom, 19.11% gain on the call options. Watch it happen again and again. Allegheny, ATI, second day of the month, we had a $250 million flow and 96.8% in 1 month. In 1 month of the ATI calls. First day of the month, $610 million money flow in Schlumberger. Look at that one. We got a 200% gain in 1 month in the call option in Schlumberger. And here's how I track it. Personally, I've got a Bloomberg terminal that costs us about 25 G's a year to maintain.
Don't remind me.
Well, try to find a kid from the street.
I'm just
value.
I know, I'm just messing with you. It's worth every penny. You got to pay the big bucks to get the good data. It's just
exactly.
the way it is.
Otherwise, you've got like the same stuff everybody else has. There's a reason he's the richest guy in New York. Let's put it that way.
Very true.
The terminal has a proprietary built-in algo that looks at every stock in the market, right? Scanning for the exact monthly money flow setup I just showed you, both long and short. Here's a behind-the-curtain screenshot with a real example of my best trade last year on Katerra. Look at this one. This was in 1 month. Check that out. 33.83%. A massive $270 million money flow surge into the stock on September 2nd. Look at that. Massive bar. And then this huge bar here. This is a sure sign of institutional accumulation. Those that took the trade alert on this one, they crushed it. They smoked it. Absolutely. Not 100%, not 200%, not even 300%. This wasn't under a month, guys. That was a 423% gain on an option. That's what I'm looking for here. That's what we're fishing for. That's what we're hunting for. So this was an actual trade recommendation from this service. Now, this was the best trade that I issued last year, but hopefully it's clear to you at this point that just throwing your money into the S&P, and this last month that we just closed out, guys, this is probably not in this one. We had a 350% last month. So that's the kind of big game that I'm hunting with the strategy over the course of the month. But hopefully it's clear to you that at this point, just throwing your money into the S&P or trading ridiculously complex trading strategies perhaps isn't the best way to reach your goals. So this is important. Your timing right now could not be any better, specifically today. So we've had some of our best months since the S&P crashed from its peak in January for 24%. How? There's a built-in hedge, guys. I don't just go long. I don't believe in just being long. I don't believe in getting diversification through sector rotation. We just seen it happen in materials and oil stocks. They'll find you hiding somewhere if you're long. They'll find everybody hiding. There's nowhere to hide on the long side. So at the beginning of every single month, I issue out 6 standard money flow trade alerts, just like the ones I showed you today. But because of the extreme volatility in these markets, I hedge those 6 trades with 3 strategic short positions, 3 put plays, 3 bear trades, 3 shorts. We look for the exact setup I just showed you, except we play the inverse of the short side. We can see institutions taking money out of stocks too. I call it a money flow cluster. Look what it looked like in January. This was January signals, right? So percent gain total on all of the cluster and the entire basket was 77.23%. As the market crashed, the hedge position saw a 352% gain. This DGX put. These are massive winners on some of these puts. Watch it happen again in February. Look at this. So total winners and losers, 80%. And boom. Look at March. Look at this. 288% on PDD puts, Chinese internet company. That delivered a 27% overall gain in a month. And this is when the market's like really tough and going down. So I can't promise you that every month we're going to see this type of massive success. But here's why it's critical you take action today. From what I've seen, being hedged is the only way to play. So over the past few months, I've seen many traders blow up their accounts trying to swing trade shorter time frames. The number one mistake they make was they weren't using a hedge strategy. Please don't be one of these traders. Instead, harness market volatility, gain edge in your trading by tracking institutional money flows. Today's your chance to get on 9 brand new money flow trades just were triggered by my Bloomberg inside my premium trading service called Money Flow Elite. You can expect 9 trades per month. Sometimes I'll give you a bonus if there's an extra trade that looks really, scintillating. And you get the entry, the exit, stock criteria, option criteria, everything we believe you need to succeed, starting with your first trade alerts right there today. They're fresh, just like the Krispy Kreme window. I'll also kickstart your Money Flow Elite experience with how to trade global money flows with options. So I'm going to answer all your questions. We cover everything from how to enter a trade, how to maximize gains. I'm going to be there to help you hit the ground running. Every single week, I send a video that's going to update you on the markets, update you on flows, so you don't miss a thing. I'm going to call out money flow developments across different markets. This is like an unfair edge, as you're going to have market insight on what I see coming next. And it keeps the combo open between us, which is crucial. So you're also going to get an MF Elite members portal, 24/7 secure access from anywhere in the world. Trust me, I just tried it. I was all over the world and it works. You'll have the MF Elite course, Elite alerts, video course, everything hosted in your secure online portal. We also, and this is coming up super soon. I think it's Friday is our next one. I do a training call. I do a monthly market meetup where we go live. We talk about everything. You can ask me how to cure your slice on your golf shot, marital problems, why your other strategies suck, like why your plants are dying in the backyard. I'll talk about everything. I have strong opinions, and you will hear them in real time on these training calls. So this is one of my favorite parts of everything. My boys are laughing as I say this, but they know there's probably an ounce of truth to that. So we go through the markets, we go through winning trades. I talk about my losers. I don't hide from them. I talk about the upcoming month's opportunity. I'm gonna answer certain questions you might have. And it's 100% live every month. And as another special bonus, you're gonna get reverse monthly money flows, the ultimate guide. Take a look for yourself what other top students have said about this strategy while I drink a little bit of water. Look at what Buck said. What a guy.
Jeff, I just bought, and one of the names I just put a long on.
You went in there, you sneak peeked it?
I can't tell you what cruise liner it is, but I just bought some calls in one. So I'm in.
That's a good time. Today's a good time. You see what I'm saying? Like today's a good time.
I like it. I agree with your analysis too.
Yeah, I give you a good write-up too, but it was one of the top ones too of the group. But yeah, it was a cruise liner. Thank you, Lance, for tipping the hand. Hey, let's give these guys some value. But you want to see the exact name with the exact target, with the exact limit to put in and the option that I'm using, then come on in. The water's beautiful. So Buck paid for a subscription with 1 month. Ray H says that Jeff Scan is what shows the recent big boy flow. We're not trading crowded month-long trades. Brent made 44% in January with Money Flow Elite. Very satisfied, said Ruben. Doing a great job. Thank you, thank you, thank you. So these are some of my best stories I've heard from my students who have followed my various strategies in the past. Not back test, real life, real recommendations. That's what they said. And they all have one thing in common. When they saw an opportunity, they took action. That's the key word, action. So remember, brand new trade alerts. We just posted them today. You get your first 9 trade alerts right now. They're in there. Normally it's $1,997, almost $2,000 to join Money Flow Elite for an entire year. But I had my team do something really special for those of you right now. I convinced them to slash the price so low today that it's basically a no-brainer, because you're here right now. You will not see $19.97 price point, not even $497. Are you ready? 9 trades waiting for you. You can join today for $97, the special bundle price. Get your first 9 Money Flow Elite trades starting this month. Let's go. They're fresh off the press today.
Jeff, I love it. I'm in it right
Very
now.
cool.
And one of them is a stock that I actually saw very, 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 very large call buying that I have not seen in probably 2 years. And it is one of the best stocks, to quote you, in the Russell 2000 to start July. I can't believe you found it and you put it on here. And
the Russell stock, is that what you just said?
The Russell stock that you have in here. It's I don't want to give what number it is, but I love it. And you know why I love it too? It's a massive mover when it goes, just like you said, and it's under $10.
Dude,
and,
you're not the only one that likes the sexy names, Lance. I'm in there too, baby. Let's go.
Oh man.
Let's go. Look, I'm not here for a long time, but I'm here for a good time, and I want to make a lot of money. So like, this doesn't have to be the greatest company in 2028.
That's right.
Over the rest of this month, I think it has a strong possibility of moving 20 to 30% the stock in a month. So when I think that kind of potential, so when I think that kind of potential is there, then like it's go time. And when it comes into my scanner, and then I use this extra layer of risk analysis on top of that, then we go from there. But it's $10 a trade, guys. Like this is like a no-brainer. And so 30 days from now, if you hate it, just give us a call back. Like they'll give you your $97 back. That's insane to me, but they will. So if some of you guys are thinking like you're slick Rick out there and you're gonna get 9 free ones, go for it. But karma is real, and you're gonna love it anyways. So do what you got to do. Do you? I'm confident that you'll.
It's a great deal, folks. Seriously, I mean, I'm reading all these reviews. Jeff is getting some. People are saying the nicest things about him. It's a great time to
ridiculously low price.
Yeah, and especially at this price. I mean, look, $97. Come on, guys. I mean, 9 trades. When I first heard that, I was like, "What? What you mean? He's giving 9 trades a year? He's giving trades now?
Right?
It's crazy.
It's a special deal for those who are right now. It's not going to be there later. These are hot. We normally don't do it like this.
Doreen says, I love it. Doreen loves it.
Yeah.
Doreen, we love you.
We love you. But yeah. And then so like you'll look forward to the third trading day of the month, every month like Christmas.
Perfect. Jeff, I think this is a great deal. And I mean, right now, what I was telling everyone in the morning meeting, we had our weekly Wednesday meeting, and I was telling my guys that a lot of the people who are in the market right now are people who are realistic about the current market conditions. And a lot of the people who were expecting pink elephants got shaken out. And these are the people who have what it takes to really make money in the market. So whoever's here, you guys really have what it takes, because you don't have any weird feelings about making $1 million return and making a 99% win rate and all that stuff that just doesn't happen. So this is reality, and I'm really glad that you guys are here. So this is a really great deal. As Peter said, stunningly good offer, Jeff. I would buy it, but I have it already. There you go. Well, that's a good reason.
Thank you, Peter.
Hey, Peter, but you can upgrade and get the next year's before Jeff realizes how good of a deal it is and raises the price.
Yeah.
So,
yeah, gang, if you call in, just a heads up, if you already have the product, if you call in, since you're here on the webinar, I'm sure they could give you like an extra year or something at a, I don't want to say a discount, but I'm sure our team will for sure hook you up if you know what I mean. So awesome feedback, Peter.
Yeah. So look at this. The average win rate, the average return per trade was 5.5, and that's 9 trades a month. 5.5% was the average winner and loser on 9 trades a month. You do the math. This thing's working this year anyways. The average winner was 94.2% over 28 holding time. That's written on the bottom there. So This is all real recommendations. This market has been incredibly hard for a lot of people, and this is a system that's been working in 2022. Like
Yeah, it's
Roger, Lance, myself, we are really only focusing now at this point on what's working, and not a
Yeah.
lot of things are working out there in the world. So I feel pretty confident with this one. I feel confident today talking about these trades because the system's been good.
Right.
So I'm excited about it.
I think what's
Folks-
pretty wild here is this is a long short strategy. This is not
It is, yeah.
his average return in a bull market only long. This is
That's what
three
makes
shorts-
it, yeah, and that's what makes it a complete portfolio, friend. Because like I have hedges. I have like I had 2 puts last month make over almost 600% on the options. So
That's great.
that
Awesome.
helps. That helps.
I think you sleep better at night knowing you're short some of the market, especially right now.
Well, the thing is,
yeah.
what this identifies when you have so if we have a bullish month, for instance, we're going to be led by some of these stocks that Roger and Lance were talking about. These sectors happen to be like the lineup correspond exactly to what the picks were in this strategy. So if we have this bullish month, we're going to be led by those names. And if they actually start to really move, some of those stocks are so beaten down that they have 25, 30% upside. But if we tank, we're going to tank because of these new sectors that are starting to get sold heavily by
Right,
institutions at the beginning of the month. That's, in theory, anyways, how the system is designed. So you will get outsized returns on those puts if we get into a bearish situation. And if it's bullish as crazy, those stocks are going to lag anyways. The puts are going to be okay because we're not going to be led up by the newly sold sectors or stocks.
And it
Most
doesn't
possible.
surprise me that Lance is seeing options flow into these same names. It kind of makes sense, right? It's big institutions buying these stocks.
Yeah.
Are they also buying calls potentially? They're moving into these names at the start of the month. Makes
Yeah.
sense to me.
Yeah.
And if you're here today, first of all, thank you. But on these names that we're talking about and stuff today, and some of Jeff's picks that I was just looking at in the member section once you sign up, these are names that are proactive trades. So you're getting in the early stages. When these names rally 20, 30% off the lows and everyone on TV is saying, oh yeah, I'm buying this cruise liner, I'm buying Roblox, I'm buying this stock. Those stocks are already going to be up 20, 30%. And you're going to be chasing the top there.
Right.
Instead, you want to be the one, like I've been doing, is selling to those people when the stock's up 10, 15% and have them chase. And that's what we're really trying to talk to everyone about. And if you're here today and you're still in the market and you're trading the market, I mean, I cannot stress this enough. You're in like the early stages. You're being proactive. Then 6 months from now, when everything is champagne and roses, everyone wants to put money in the stock market again, that big move's already going to be gone.
Yeah, so like
And
I'm
that's
already
where you
like
get chopped up.
forfeiting. I'm like kind of like forfeiting the first 2 days of that month. Like the first like 7% of a 35% move, I'm okay with missing out on after a stock's been trounced for 70%, right? The idea being that when institutions start piggybacking again and saying it's okay to get back in the stock, they're going to move it a lot more. And they're gonna feel more comfortable, and then it gets better and better. And then, like Lance said, you're gonna see like the talking twits on TV after the whole moves happened. Then it was the best performer for July, saying, "Oh, I love this one cruise line stock." Well, yeah,
Right.
You should have loved it on the third trading day of the month.
Exactly. Or
Proactive.
when one fancy Russell 2000 company where you put your food that you don't eat, your leftovers, gaps up, 10,
Come on,
20,
bro.
30, 40%.
Come on, dude. They gotta
Then
buy
you're
it.
going to see
Keep
Wall
going over
Street
here.
upgrade it all. And by that time, your
Man.
options are going to be exploding in value. You're going to be like, oh, baby, I was already in when the stock
Lance is
was
talking.
in
Lance
the
got
single
that slick
digits.
haircut. Lance got that slick haircut, and he's talking slick. Come on, bro.
I cannot say this enough. If you can get in, try it out. It's $97.
Yeah.
I just took a look
Yeah.
at all 9 picks.
They're good, yeah.
They're
and
great.
I love it.
They're
I
great
love it.
picks.
They're good. There's some sexy ones there, right, Lance?
Yeah, no, they're not your typical like, hey, buy Apple for
No.
for 30 days and hopefully it goes up. No. They are stocks that my degenerate self, my trading self actually love because they move and the options are cheap. They're my kind of names out there. And what I like, Jeff, is you give a full analysis
I
on
do.
why on each
Yeah.
pick, which
Yeah.
is something really, really cool.
Thank you, bro.
And I love how you get 9 trades in the beginning of the month. It's a great way to start the month.
Yeah, they don't have to like keep up with it. There's no expectation. Like you're not going to be like out at like your little kid's little league game or bingo night or riding a cowgirl or whatever the hell you do on Friday night. You're gonna be knowing that the stocks the picks are coming out 3rd trading day of the month in the morning, and you got to get out by the end of the month.
So I just looked at it now because we're in the webinar.
Yeah.
And but when do you send out these picks every month? So
this
like
morning,
let's say next month.
the 3rd trading day, and then we trade out on the last trading day. Sometimes we hit our target early. Sometimes we might get stopped out. Sometimes there might be like a massive like fundamental change in the thesis that I have to evaluate. But I'm on top of it all the time. Otherwise, they just can expect like 2 actionable emails from me a month, entry and exit.
Awesome.
I'm pretty shocked at the biotech that's in that list. Honestly, it's a company that I look at once in a while because I've been wanting to kind of get into it, and that's interesting to me.
Don't get me started on biotechs. Look at the strength in biotechs. So I love that. It is a sector nobody is talking about right now, but once these names start rallying and getting the mainstream attention, that is one sector that has just been absolutely on fire despite what's going on in this crazy world.
Right. You actually talked about it like a week or 2 ago, Lance, that you're starting to like biotech again.
Yeah, I think Lance and I were both on that show when we were saying how there's a lot of stuff merging between medical and biotech, healthcare and biotech, and healthcare looks like it's rallying, so that's going to give biotech a nice little boost. There was a really good article about it, actually giving it like a full tracing in Bloomberg like 3 weeks ago, 2-3 weeks ago.
And some of these companies are basically at cash value too. That's the crazy part. They just got beat down so much with the overall market. So Jeff, I love it. I already put some money to work on some of the trades.
There's a guy, Raj, that's got some issues here. If there's a customer service guy that can reach out to him. We're not customer service.
Raj, I got it covered. Don't worry, Raj. You got to call customer service for that.
Yeah, sorry.
We got 400 people.
We want to get you going. Trust me.
Yeah. And guys, if you paid but you didn't get your emails, probably because there's so many people on the line. So just be patient; it'll come to you, I promise. Or just send out an email or put your name, phone number, and email here, and we'll get it going. Yeah, customer service is busy, but they're actually really good customer service. They will take care of you.
Take a deep breath, Raj. Take a deep breath.
and once you sign up, what you do is like I just went in. You go in the members area and you go to the monthly money flows elite, and then just click it right there and you get all 9 trades. It's very easy. You just log in, you'll get your password, and it's all very secure.
Simple and easy. And again, if there's a problem, you could just put your name, phone number, and email here, and
do that. Raj, put in your stuff, your information. Somebody will reach out.
Yeah, put in your phone number, email, and nobody could see it except us. We got it, Raj. We got it. Nobody's going to front run you.
Take a deep breath. These trades are going to be like, I give like a lot of runway. We're going for the whole month. I'm not trying to make 50 basis points. We're trying to make multiple 100% on these trades. So
and look at what Ray says.
Calm down. We're not market making in the next 15 seconds. It's all good.
Yeah, nobody's going to front run you, buddy. Don't worry. It's all good. And it is monthly.
It's designed to get in over a few days.
Anyway, folks, get in on go to wealthpress.com/flows. Do it right now or call 877-212-2649. Jeff just came back from a vacation. His battery is regenerated.
Yeah, you see how excited I am?
He's ready. He's ready to go. He is ready to go. So
they're Aggie. They're brand new. They came out this morning, but like I give plenty of runway for you guys to get in over a couple of days. There's like good limits. A lot of them are really tasty right now. Lance just got in a few tasty ones that are setting up nicely. Like the entry today is really good for us. So
real good entry. I love it. And we're gonna have to wrap this up soon because if not, I'm gonna start giving away more of the picks because I just bought another one right now. Great session, guys. And again, keep in mind this market is very, very volatile. There is risk. Stick with guys like Jeff, with Lance, myself. We're going to try everything possible to keep you guys on the right side of the market. And a good way to do that is with the $97 special that Jeff has right now. You're not going to find a better deal than this right now on Wall Street. And again,
recession buster. It's a
The
recession.
recession buster. There you go.
Yeah.
There you go. And plunge protector because it has short trades too. So get in on this now. Enjoy the trades. Take advantage of winning trades from a winning strategy. Thank you,
all
Alex.
for watching my presentation. I hope I didn't bore.
Thanks,
throughout.
guys. Thanks, all of you guys. Appreciate it. Have a great day. Thanks, Francisco. Bye, Jeff.
If you're
Bye,
watching
Lance.
on-
LFG.
If you're watching on YouTube, go ahead, leave a comment, like the video. If you're watching this right now over Zoom, go onto YouTube and go like the video as well, please. The link is down there so you can get all the details of the program. I also dropped a link right now where you can actually schedule a call with one of our reps. So if you're not getting anyone on the line right now, you can actually schedule a call right now. And thank you everybody for joining us. Thank you, Lance. Thank you, Jeff. Thank you, Roger. Well, next Wednesday, 11:30, same thing. Let's do it.
Thanks, guys.
I appreciate it. I appreciate the help.
Take care, Jeff.
Thanks, everyone.
Later.
I just went ahead and dropped that link again. If you click on that, you can actually go ahead and schedule a call. So if you're having trouble getting through, if you're getting a busy signal, just go ahead, click there, and you can schedule a call at your own convenience. Also, there's a page up with all the details of the program, the 9 trades you get, the 3 longs, the 3 shorts. So check that out. Thanks again, everybody. Talk to you next week.